All right. So 2024, doing podcasts.
Yep. New thing for both of us.
Excited about it.
Yep. I like to talk. I think Denae does too.
Yeah. Yeah. We'll go through what we know with the real estate market and kind of share our expertise. I don't really feel like there's too much of this out there.
No, locally, specifically in the greater Seattle area, we really want to be a resource for buyers and sellers, both a real estate broker and a lender, and just really dive into topics that I don't know are being explained.
Yeah, I feel like I've constantly gotten different myths that people, they're like, wait, what's this? Oh, that's not true.
Yeah.
The amount of people that still think there's 20% down needed.
No.
Isn't right.
There's no.
So hopefully we can just like give some general insight, some market updates, some detailed insight to kind of make people feel more comfortable and purchase homes.
Yeah. Purchase homes, sell homes.
Yeah.
Denae doesn't really help with the selling homes. I do.
But if you already own a home and you want to buy another home, there is some strategies.
Oh, absolutely.
All of that.
Yeah.
So
yeah. Perfect.
Before we fully dive into us and all of that, we're going to be drinking some wine each episode. So the first one we have is Plain Cellars. Very important to both of us.
Yep.
We'll get into that a little bit more with insights to our personal life and everything. But we were both actually there together over New Year's.
We were, yeah.
I picked up this bottle in preparation for the first episode. So
yeah.
Let's open it.
Okay, let's do it. I'll let you open it. Oh wow. So I'm the type of person that I just start uncorking it.
If I can pull it off.
I have never seen that done.
Really?
Yeah, I know.
If I can pull it off.
Okay.
I'm pulling it off.
Okay, so why are we talking about Plain Cellars? Well, I own a cabin it's Leavenworth, but basically it's 5 minutes south of Plain, which is about 25 minutes north of Leavenworth. And then Denae, your family owns my cabin.
Well, my mother-in-law now lives over there full time.
Okay.
They moved over there a few years ago. My husband grew up going over there.
Yeah.
Ready for the best sound?
Yeah.
Oh, wasn't that silent?
Wasn't that?
So this one is a Petite Sirah, 2019. Sometimes we may not have the wine prior, but this one I have had, and literally the first time I took a sip, all I said was, "Holy yum." First words that came out of my mouth.
It's for you. Whoops. Should we put the cap back on so we don't accidentally knock the answer? This would probably be good. All right. Beautiful color. Yeah, it's like absolutely stunning. Like, cheers. Deep. Such a good. That's nice and dry. I love
dry and bold. I always like a wine that I always say that you can chew.
Yeah, I like that.
So 2019, the Petite Sirah, Plain Cellars, they're growing. Awesome little place. They have a new food truck there, which you had some of their food.
At their food last weekend.
So my gosh,
so good.
One Friday a month, at least through the winter, they're doing like a 4 or 5 course meal with the Taste of Plain.
Ooh,
wine pairing.
About this.
I think it's like $60 to $80 depending on what they're doing.
That's a great value.
Yeah. And then during the summer they have like concerts come in there with food truck, all that type of stuff. So
super fun. We will put in the show notes every single episode what we're drinking so that if you want to get a bottle of it, please do.
Please do.
We really want to be members here. So Plain Cellars, if you're watching this,
let us in.
Okay.
Every time we go over there a lot.
Yeah.
And we're starting Fridays when we get over there, we'll just go there for dinner.
Yeah.
For ease. And every time we're like, are you open? Like, no, I don't know. Fun. Eat some.
Yeah.
Let's go ahead and dive into everything.
Yeah.
I guess to start, let's tell them who we are, both professionally as well as personally.
Sure.
Yeah.
Okay, where did you grow up, Denae?
I grew up in Snohomish.
Okay.
Go Panthers. Love Snohomish. My parents still are on a lake in the middle of nowhere, Snohomish.
Blackman's Lake?
Rossiter.
Oh,
Lake Oscar. Yeah. Absolutely love it out there. It's a little gem out there. I graduated from Snohomish High School, went to SPU for 2 quarters. Seattle wasn't my thing. The small school wasn't my thing.
Yeah.
So I transferred to WSU.
That's quite the difference.
Yes. Yep.
Okay.
My lifelong best friend was playing basketball over there. So I called her and I said, hey, get another room this next year. I'm coming over. So moved in with her. Now, 2 of my other best friends, there's 4 of us total, are all still close.
Love it.
What
did you study?
Business.
Business.
Management and operation.
Cool.
So just very generic.
Yeah.
Generic there. I was a competitive figure skater growing up. That was kind of my staple. I played basketball and soccer, but I was like,
figure skating was your thing.
Figure skating was my thing.
Yeah.
I still coach a little bit. Coach Wednesday nights, just like group classes, kind of keep me on the ice, all of that type of stuff. I am married. Married for 6.5 years.
Love it.
Have an almost 2-year-old daughter. We're getting into the terribles too stages. Yeah. So
just you wait for your reading more.
Okay. Yeah. Oh boy. I think that's a lot just general about my personal.
Okay. Professional.
Yeah. I have in March, it'll be 9 years, which is crazy. I started out as technically our branch manager. I started out as just his assistant, just doing basic stuff. And then as time grew, I took on more and more. And over the past few years, he's starting to phase out, take steps back. So we really partner with everything.
Yeah.
And both with running the branch as well as our loans and all that stuff.
Awesome. So you've always been at North Pacific Mortgage?
Yep.
That says a lot in this industry. It's staying at the same place. Seriously.
Yeah. And we've been with our bank, which is American Pacific Mortgage, for the whole time I've been there. Phil's been with them even longer than that. So that says a lot too about our bank.
Yeah.
They are
absolutely
all we do are mortgages. We have the ability to broker out. So whether it's rate driven or scenario driven, they give us this really flexible platform, which really allows us to take care of the client's needs, whatever that. I try and keep it at our bank just because we've been there for so long. There's a reason, and they want to do mortgages. That's what they want. They will get stuff done. I can call my underwriters. I can call my underwriting managers. All that type of stuff. So really great. Really great.
Local team. Local is so key when you are buying. So
and everything from our underwriters are like
often with these big banks is their underwriting team, their processing teams are out of the state, and you can't necessarily pick up the phone and call them and troubleshoot something. And that is where the issue comes.
And it's even like, whether it's like appraisal issues, which we had one of those last year.
That'll be another episode.
Yes, that's another episode. But it's even like we have big companies in this area.
Yeah.
And there's been times that I've called them and be like, hey, this is a Boeing employer, like I'm very specialized, and they lived in Woodinville. My underwriting managers that they're like, okay, I know that it's not someone from Illinois. That's like, wait, Seattle area, it's a completely different market. So we're really happy with our bank. I jumped to what about you? Where did you grow up? You kind of
I'm a pastor's kid. Was born in North Dakota. When I was 6 months old, moved to Helena, Montana. Stayed there till I was 8.
Okay.
Then I moved to Vegas till I was 11. Then I moved back to Montana to Kalispell. Okay. And then I graduated from Flathead High School in Kalispell.
Oh no, I knew you were Montana. I have a big connection to Flathead Lake.
How so?
My lifelong best friend that I went to WSU with, her whole family has a big cabin there.
Like Big Fort, Lakeside, Wilson.
That sounds familiar, but I don't.
Yeah. Flathead Lake is incredible. It's so huge. It's beautiful. I mean, it's way bigger than Lake Washington. Lake Washington is pretty big. Flathead Lake is gorgeous.
Yeah, it's enough.
Yeah. So I grew up, I say primarily in Montana. Again, as Patrick's kids, grew up quite a lot. And then
where you like identify as home.
I identify Montana as home.
Okay.
For sure. Yeah, childhood home. I've now technically lived in Washington State longer than I lived in Montana. So, but yeah, when I tell people where I'm from, Montana. Then when I graduated high school, I went to Northwest University in Kirkland and have been in the Seattle area ever since. I met my husband my first Sunday here, went to church that was recommended to me, met him. He was like 2 pews in front of me. And I was like, that guy's cute. And he turned around and he was like, that's the one. And we started officially dating like 2 months later. We've been together for over 16 years now, which is like, holy cow. Yeah. We've been married for going on, it'll be 13 years in June.
Because you guys got married pretty quick.
We got married when we were 22. Yeah. Yeah. So right after we graduated. We have 2 kids. I have a 9.5-year-old daughter and I have a 6-year-old son. Who's very busy. So
just being a mom or just working was it?
I don't know. Yeah, right. But I feel
cheers to mom working
seriously. We are the real ones. No, every mom is the real one.
Yes.
So yeah, that's kind of my personal life. I mean, my spare time. I just got back into CrossFitting. So that's been really fun and hot.
TRX for a while.
I taught TRX for a long time. I was a group fitness instructor, like personal trainer, kind of before I got into like the mortgage real estate world. So that's that's kind of a passion of mine.
Yeah,
love that.
Cool. Mm-hmm.
Yeah.
How long have you been doing real estate?
Going on 10 years. It'll be 10 years in August.
Okay.
Yeah. Why?
Having your license, or is that okay?
Yeah, like the whole thing. So basically, long story short, I was in the mortgage world for like 2.5 years out of college. I got laid off. Bank was merging with another bank. Unfortunately, it's just that time, 2013. There's lots of changes happening in the Seattle area, like tech and finance wise. And so got laid off. 2 days later, I found out I was pregnant with my daughter.
Oh, that's
right. Great timing. So I was collecting unemployment, going on job interviews like crazy. Of course, people see this big belly and they're like, I'm not going to hire you, which is, I have thoughts on that. But amazingly, the real estate brokers that I started out with, boutique brokerage, they hired me 2 days before I had my daughter, said, take 10 weeks off, get your real estate license during that time. So I was blurry-eyed breastfeeding newborn phase as I'm getting my real estate license. I passed, got my license.
There we go.
And I'm so grateful to those two people that hired me. They're no longer in the industry, but if it weren't for them giving me a chance, I wouldn't be where I am today. So yeah, really, really grateful for that.
Makes a difference who you start out with.
Oh yeah.
And I think, I don't have any like data on this or anything, but like it would be interesting to see like a direct correlation of like who you start out with.
Yeah. When your success rate
and not only your success rate, but like how you get success.
Mm-hmm.
So, I mean, you can get success by being a bully and pushing through and like being super, super salesy and controlling and all of that. Or you can also be like, if your mentors are the ones that are like, hey, I truly just want to help you through this.
Right.
You may not get that overnight success that people see, but
you're nurtured.
Like, yes. I mean, both of our businesses are referral driven.
Right.
And that's, and that means like our clientele trust us even more. And it's, I think it makes a big difference.
I do too.
Yeah.
I do too.
So we both have been doing this for
almost a decade.
We've seen a lot.
Yeah.
We've seen a lot of ups and downs. We've seen good times. We've seen bad times.
Mm-hmm.
And I think each time it's just a learning. So the market, I think that's kind of one of the first things that most people will want us to talk about.
Yeah.
I think
so that's January right now.
Yeah.
We are in the second week of January, 2024.
Yeah.
What are you seeing recently?
I guess background 2023 sucked.
It did.
Let's not sugarcoat it.
Every single person in the real estate industry, we were trudging through and really, really working hard for our clients.
I don't know if you know, I don't know the exact numbers, but I can,
Yeah.
a general, the number of MLO mortgage license decreased by like 60 to 70% over the last 2 years.
Oh my.
So everyone and their mother were getting their LO license in 2020, 2021 because, and to be honest, like we kind of needed more people in there because everyone.
Well, and everyone was refinancing too.
Yes, and it was easy. It was easy. You didn't have to work to get the loans. You had to work on the loans, but you didn't have to work to get them. So it was easy.
There is unfortunately a very low barrier to entry into the real estate and mortgage,
but to actually be successful.
Correct. Yes.
So
here we are today.
Yes.
Successful.
And that's what we tell. I also help run a branch.
Yeah.
So as I'm talking to my LOs and everything like that, it's like, hey guys, like
LO stands for loan officer.
Sorry. Yeah. I keep telling them like, hey, yes, I know these last 2 years have been really hard.
Right.
But you made it.
Yep.
We are seeing, we'll dive into it a little bit more, but we're seeing improvement.
Yep.
We're seeing positive outlook into this year. So we've made it. We knew this year and, just keep cheers to that. That's huge. So 2023 there was huge outlooks that we were going to see improvement.
Right.
I mean, they were projected, all the experts and all of that. And that's why you take everything with a grain of salt. Yeah. You see. So as professionals, where, we have to get the information somewhere, as well as what media says. They were projected mid-5s by the end of last year.
Yeah, I remember them saying that.
Clearly that didn't happen. The exact opposite actually happened. I would say overall, we saw a lot of ups and downs, but I would say overall, the trend was up.
Yeah.
We hit mid-8s at one point.
Yeah. It was rough. And literally that's basically triple, if not quadruple. Well, close to quadruple what rates were in 2020, 2021.
Granted, 2020, 2021, we will use a big, bold word of never see those rates again.
I agree.
And we shouldn't see those rates again.
No, it was unsustainable.
Because it's not only for the real estate market, but it's an inflammatory, it inflates. It's an inflationary. There we go. That's
right.
Inflationary. Because people are, they're not having to pay that much for their house.
It was cheap. It was cheap to buy a home, and not cheap money to buy a home.
Correct. And then not only are the primary home buyers, first-time home buyers spending, but the investors are they're able to offer even more because they have all this expendable funds.
Right.
And it's essentially free money when you're at 3%. So it wasn't healthy for the economy.
No, it wasn't. It ain't healthy. The home appreciation, I mean, it was anywhere between 20 and 30%,
which is insane.
Year over year, 2020, 2021, early 2022. I mean, these are insane numbers that homes are appreciating by. And now because rates are in this higher range, quote me if I'm wrong, right as of today, the second week of January, we're in the high 6s, correct?
Obviously when it happened.
So I don't generate that.
We're I'd say
approximately high 6s.
And I'm actually, it's getting a little bit more like detailed, but I'm quoting people 1% discount point.
Okay.
I typically try and do, minimal cost for the rate, but right now how investors and banks are pricing their rates, paying 1 point discount, so 1% of the loan amount, gives you a huge improvement on rates. Where so I'm seeing paying 1 point will get you 1 point reduction in interest rate.
Okay.
Where if you pay 2 points, you may only see 0.5% decrease. So
we'll have to do a podcast.
It's definitely not, but but I guess general sense, don't be afraid of paying a discount point.
Right.
There's a lot of what was established in 2020, 2021 that isn't so much the case anymore.
Right.
Because then I'd be like, don't pay anything because you're already getting a 3.25%. Don't buy it down even more.
Right.
But right now we're seeing a big improvement. So
that's good.
Yeah. I'd say, mid 6 to upper 6s is kind of where we're sitting. About 2 weeks ago, we saw a huge improvement in the interest rates, like almost a percentage.
Yeah.
And that was kind of the first push forward.
Right.
That was really driven by the Feds announcing that they will likely be cutting rates next year
or this year.
Yes, this year.
Sorry, 2024.
Yeah. In 2024.
The Fed rate is not tied to mortgage interest rates. So let's just put that on the record right here.
Yep.
They are tied to
mortgage-backed securities.
Yes.
But what the Fed say have an impact on how investors use their money.
Right.
So when a recession comes, when inflation numbers come down, all of that type of stuff, then whether it's the Feds allocating their money into bonds, or private investors investing into bonds versus stocks for security, that's the more people invest in bonds, the lower rates will go.
Yeah. And I'm already seeing that happen, especially since the Feds did that announcement.
Yeah,
in 2020.
So we saw them drive down.
Yeah.
But then the last 2 or 3 weeks since then, we've seen this very minimal up and down, kind of trending slightly, ever so slightly worse.
Okay.
Not enough to make it notable.
Yeah. Because I remember we were at 6.5 and we were really, really holding tight to them. And then I would say this last week and a half, I have seen a 30-year average being about 6.75.
Yeah.
And it's really held tight to that, which is really nice to see this crazy volatility that we saw all throughout last year.
And that's really because there's different Fed presidents that are saying, well, I don't know if we're going to cut rates. They're pulling back on that. So what the media says, maybe not the media, these Fed people who don't all actually have economic backgrounds. I think it's very interesting, but that's a side note. What they say versus what they do also make it impact. So that's where it's really hard to predict. All that being said,
where are we going in 2024?
It is a projection to go downwards.
Okay.
I would say by the end of this year, beginning of next year, we'll see low 6, maybe upper 5s.
I love it.
Somewhere in there.
That's where I got my mortgage when I first bought my home. I think I was at 5.5. And I was like, oh my gosh, freaked out.
Yeah.
But I'm like,
a great
that was a way more sustainable market
to
be in as a buyer.
Yeah.
So I'm like, I'm pumped.
I really am. But I think what's so interesting is I'll kind of make this last comment and probably jump over to you, is for each 1% decrease in rate, there is projected, I've seen multiple different numbers, so between 3 to 5 million buyers re-entering the market nationally. Yes, nationally. But there's a lot of people in Seattle
There's a lot of people in Seattle. We are so tech driven. We have a very strong economy locally. And so out-end buyers are, they're looking at these national headlines going oh my gosh, the sky's falling. But you got to look at locally what our job pool is. We have so much tech here. Strong job market here.
And I feel like I've seen headlines that are home prices are going to go down in 2020.
I haven't seen that yet.
I thought in Good Morning America or something.
Sure.
But that's, I think I called out Illinois earlier today. That's in the Midwest. It's not on these coastal, both sides. There is high population and especially in the Seattle area, there's high wage earners.
Yep.
So, I guess for you, can you talk to when 3 to 5 more million buyers enter the market, what's that going to do for buying and selling?
Well, I've already seen it where the last 3 weeks, especially since the rates did go down after the Fed's announcement at the end of 2023. Holy cow. I was at an open house on Saturday and Sunday, and I could not believe the amount of people going through the door. I have not seen open houses this busy in a year and a half.
Did a lot of them come with an agent or just maybe
I mean, I was present with one of my buyers, but and I could tell that some buyers were there with their agents. There were definitely probably a dozen or so people that were just going through, checking out the open. And so with that, I'm writing an offer for a client tonight. It's due tomorrow morning at 9 a.m.
You see,
And
new date.
yeah, and the listing agent thinks there's going to be 4 to 5 offers. I have not been part of a multiple offer scenario in like, gosh, a year and a half.
Yeah.
Almost. Yeah. It's got to be a year and a half if I look back on my record. So because, and I talk about this with my buyers in my consults. They're worried about like, oh, I should wait until rates go down. Don't do that. Like, please don't do that. You need to buy when it's right for you.
Yes.
And your situation. You need to sell when it's right for you and your situation. And this is your call. This is not my call. This is not Denae's call when you choose to buy or sell. You need to do what's best for your situation.
Yeah.
If rates continue to go down, more buyers are going to enter the market. And like you said, 3 to 5 million people nationally are going to get back to the market. We have such a strong job market in this local economy here in the Seattle area. Already I'm seeing more people entering the market.
Yeah.
And so with that, there's more people looking at homes and wanting to buy a home. We still don't have the inventory to support all the buyers looking to enter the market right now. And so because of that, because there's this home that, again, my clients are offering on tonight, there are 4 or 5 buyers that are looking for this type of home, but this is the only home in this particular area that is on the market available to them.
So I've kind of been telling clients that are like, they've been either looking for a while or, obviously they're mentally like, I want to buy a house.
Yeah.
I've been telling them like, I really think that the next 2 to 3 months,
Sweet spot. Absolutely.
do you think that's still true? I mean, with this multiple offer, do you find it?
No, I would have said that a week ago, but then this week I'm experiencing this offer situation. I'm like, dang, I think the sweet spot was last month.
And the last 2 weeks into that.
Here's the deal. I think the sooner you can get into the market now as a buyer, the better off you're going to be, because even if you bought a home at a 6.75% interest rate right now, you just have to make 6 payments before you could refinance.
That's in about 8 months.
Yeah. So, right. So then if at the end of this year, you're at a 6.75% right now in January, but let's say it's 5.75% at the end of this year, oh my gosh, you get to refinance and you get to capitalize not only on the appreciation that you gained in that, let's say, 11-month period, because buyers are entering back in the market, they're driving prices up again, but you get to capitalize on that interest rate. You get to keep your home and you get to reduce your monthly payment.
Yes.
How amazing is that? I've refinanced my house 4 times in my 9 years, 3 of owning my home. And I went from a 5.5% interest rate approximately, and now, I refied, I think it was like 2 years ago, to 3.25%.
Yeah.
I never thought rates were going to be there.
Yeah. My general rule is a 0.5% decrease in rate.
Yeah.
To have it make sense. And I'll have clients be like, well, is it okay if I refinance more than once? I was like, yeah. And I tell my personal story.
Right.
We bought in 2018. Rates dropped in 2019.
Yep.
A little bit. We refinanced.
Yep.
And then refinanced again in 2020 when they plummeted even more. I had 3 different loans my first 3 years buying our house. And we saved a ton of money.
A ton of money.
And if we see
I paid off debt too.
Yeah.
In my second refi, we paid off all of my student loans because my student loan rates were insane.
Yep.
We were able to get those rates down from like a 10 to 12% interest rate down into like a 4-ish.
Yep.
Pay that off, still have a lesser mortgage payment, which is amazing.
I got a couple notes on that. One, like, there's so much you can do with refinances.
Yeah.
And especially if we see home values go up, if you buy with less than 20% down, yes, you have mortgage insurance. But if you see values go up, you have mortgage insurance.
Yes.
If you have values go up, you can potentially reduce your interest rate,
right,
and either remove or reduce your mortgage insurance if it goes up enough. On the paying off debt thing too, it sounds crazy, and people may think I'm crazy for even like bringing it up, but if people have a ton of credit card debt, even at the higher rates now, even if you're sitting at a 3% rate, I've seen it make sense for people do a cash out refinance because credit card rates are 25%.
Yeah.
So you're paying, if people have $60,000 worth of credit card debt and a car loan and this, that, and the other thing. And I've seen people cash flow like $1,000, their mortgage payment goes up $1,000 but their overall other liabilities go down. You remove $2,000, so they're cash flowing $1,000 a month. Like, it can be life changing.
That, and it's going to look better to the credit bureaus.
Your credit bureaus, if you have that much,
it's going to improve your credit. You have secured debt
Yeah.
instead of unsecured debt via credit.
And then, kind of on this market right now, if you do a cash out refinance now, consolidate all those rates, go down, you can refinance again.
There you go.
And a rate and term refinance has better rates than a cash out.
Right.
So, it's a bigger liability for the bank if you're pulling more cash out. And like you said, your credit will improve. So it's kind of like, do it now, get the cash flow, and then optimize the rate on a potential another refinance. Sounds like a lot. I always tell people I have all these different programs that can like very clearly lay out if it makes sense versus just be like, oh, why does it make sense to go from a 3% to a 6%, 6.5%, 7%, whatever it ends up being, like, on a cash out refinance. So
I tell people too, like, knowledge is power.
Yes.
And don't not explore your options.
Yes.
Don't not get pre-approved because you're even remotely considering buying a home.
Yeah.
Because you don't know what you don't know unless you try, unless you explore that option. And if you decide now is not the right time to buy for you, awesome. No problem. But you don't know what you don't know.
Yeah.
And I just think that knowledge is power, and just knowing what your options could be is so empowering. So that's my little spiel on that.
Yeah. I always tell people that they're like, oh, I don't know. I'm like, I have half the people come to me in the same position and they look at the numbers, they're like, can't do it. And then the other half are like, oh, wow. Yeah, I can buy a home.
Yeah.
So, like you said, knowledge is power.
Yeah. I mean, another thing, so open houses are really busy. I have been showing a lot this last weekend, especially on Saturday. I was at CrossFit yesterday and they're like, what did you do this weekend? And I'm like, I showed 7 houses and I went from Monroe.
Workout in itself.
My gosh, I went from Monroe to Snohomish to Marysville to South Seattle to Sammamish, and then back to my home in Linwood. So I think I clocked like 150 miles. So like, people are getting real busy. Here's the other thing. I have 7 sellers.
We're just yelling good for buyers.
I have 7 sellers getting ready to list their homes the end of Q1, quarter 1, quarter 2, if not beginning of quarter 3 this year. For context, I sold 2 listings last year. Okay. So I have tripled the amount of sellers that I'm serving this year. I helped a lot of buyers last year, which was awesome. But sellers, and especially move-up sellers, so they're the move-up buyers, they want to get rid of their home, it's too small, they need something else. They are coming out of the woodworks and they're like, okay, rates are what they are.
Yep.
We're all in the same boat. But the pain of me living with 3 kids in a 900 square is like so horrible right now that they're like, okay, there's like that pain threshold that they're like, okay, I've reached that. I'm ready to like move on to the next scenario.
And that plans for me. Felt security and job.
Absolutely.
Maybe all of that type of stuff. But it's it's more.
Yeah. So 2024, I expect big numbers out of my business.
Yeah.
What's your outlook for your 2020?
Yeah, I think anything. I think our thoughts is 2023 is going to be good. No, sorry, 2024.
Still getting used to.
I'm still getting into the year. 2024 is going to be good. 2025 is going to be even.
Okay, I love that.
Yeah, so I think this is like a year of like, okay, we're actually like comfortable with living, we're comfortable with our income, we can, do fun things within our branch and all that type of stuff, and spend a little bit of money on other things. Right. But 2025 is going to be where we feel that like more comfortable.
I think it will feel more stable in 2025 because we are in an election year. And I experience, I've been through, I think, 2 election cycles now, presidential elections. And man, buyers pulled back big time in that quarter 3.
And rates can go wonky.
And they go all over the place. And so I do expect not turbulence the end of this year, but I think hesitation from both buyers and sellers the end of this year. And so once we can get past this election, I think 2025, we'll sit back down, you and I, in January and I'm sure it would be very interesting to compare this podcast to next year.
I think we'll have our podcast notes so we can actually highlight our predictions and what we thought.
Yeah. Were we correct?
Yeah, exactly. So, I think we could talk probably
for
hours about this.
Yeah.
I think the last statement was kind of a good leeway into what our goals are for this.
Yeah.
Kind of what our next few episodes will be. Of course, we're going to be highlighting a wine every time.
Heck.
I guess personally, reverting back to personally, clearly we're both winos.
Oh yeah.
And then the first series that we're trying to do is the buying process, right?
Yeah. So we're going to do a 4-part series this year. So series 1 is, we're starting with this. We are going to, the next episodes 2 through 5, we are going to talk about the buying process. So there's a 4-step process that I take my buyers through. There's going to be a lot of things that you're going to share value on as the lender side of things. Of course, I'm really that point person that's helping buyers write a contract, get in homes, secure the home. Denae is the person that is going to help with the finance piece, and that as soon as you get a contract signed by a seller, get you to closing. So there's going to be lots of dialogue that we will go back and forth on. Yeah. Episode 6, we are going to kind of revisit what's happening in the market, because things do go up and down with that. So we do want to bring that value to you guys so you know what's going on, like semi recently.
and not just go off with the media, because
we are in this.
Yeah.
We are full-time. She's a full-time mortgage lender. I'm a full-time real estate broker. Yeah. We are doing this day in, day out. Get your info from people that are actually in this full-time in the local industry.
Yes. Don't get it from big time medias. They're either delayed.
Right.
They spin it.
I'm sorry, but are these news writers, are they in this industry day in and day out?
Exactly. So, I think each episode will probably, if there's something big, market changing, market impactful, we'll make note of that, but kind of keep the market update minimal because.
So then second series, we're going to talk about listing a home. So that's going to be focused, I guess, kind of more on me and my process. But let's say you're that buyer that wants to buy a new home, get rid of your older one that's fitting your family's needs. Obviously, Denae's going to be all that too. Yeah, there's a lot that goes into that. So we'll dialogue back and forth on that. Summertime, we're going to do a third series. Our third series will be kind of highlighting local businesses, big into supporting local. Yep. So we'll highlight some businesses that we think you guys should check out. And then fall time, we are going to do kind of like FAQ. So frequently asked questions, dive deeper into specific things that maybe we could do a whole hour podcast on. I don't know.
Yeah, but I think our thought was kind of doing hopefully shorter podcasts on
that's quite fun. Yeah.
I mean, I think
so we'll do like multiple podcasts that are going to be shorter, but they are going to be targeted specifically on a specific.
Yep.
Yeah. So that's what we have waypoint for this.
Yeah,
it's fun.
Yeah, it's
first podcast experience.
Yep. Cheers.